Okay, hello everyone. I am Nadira, your moderator for today. So today's topic will be swing trading with Fibonacci. For your information, today's webinar is brought to you by Bursa Malaysia and also managed by LifeGem. So before I begin my webinar, let me read the disclaimer first. So the information does not constitute any legal, financial, trading, or any endorsement regarding any and all products mentioned. So Bursa Malaysia Group of Companies and representatives do not accept any liability for the information provided during the presentation and in the presentation slides and for any investment or trading decisions made on the basis of this information. Okay, let me introduce you to our speaker for today. So our speaker for today is our beautiful lady, Miss Pauline Yong. She is a founder of Sigma Wealth Sendirian Bahad. So Miss Pauline Yong is a licensed and also experienced financial planner who is certified by the Malaysian Securities Commission Financial Planner Representative License and also Bank Negara Advisor Representative License. So over 25 years in education, she has accumulated over 50,000 students and also conducted over 200 large-scale corporate courses. Ms. Pauline Yong also is a best-selling author who has published over 6 books on investment and financial planning. So hello, Ms. Pauline, how are you?
Hi Nadira. Hi everybody. Good evening. Welcome to the Bursa webinar, and let me share my screen.
Okay. Thank you.
I can't share my screen. Let me try again. Nadira, can you stop sharing so that I can share? Yeah. Okay.
Okay, sorry.
All right, so a very good evening to everybody. Today we have a very interesting topic. It's called swing trading with Fibonacci. Okay, so maybe before I start, I just want to find out from you guys, how many of you have zero technical analysis background? So how many of you have zero technical analysis background? That means you do not know anything about technical analysis. And then how many of you have 1 year? And if you have 1 year, you type 1. And then if you have 2 years, you type 2. And then you have more than 3 years, you type 3. Okay. So I see, oh, so many zero. Some 0, some 3, some 1, a lot of 1. I think today's session is very suitable for those who are 1, maybe 2, or maybe 0. Okay, so for 0, you probably will find this a little bit more calculation, but then those are very simple calculation. Okay, so if you have calculator, get ready the calculator. If you have paper and pen, probably you want to take down some notes, you can do so and go and grab a pen and a paper. So we're going to do some calculations today. Just now somebody asked whether the investing.com or the tradingview.com, the auto Fibonacci, is it accurate? Usually I don't rely too much on the chart platform. I rely on my own calculation. So that is why I will teach you the manual calculation today. Okay, so if you have the calculator, get ready the calculator. Okay, so today's agenda. So we are going to learn about Fibonacci ratios in trading, and how to identify the swing high and swing low, and learn about the pullback and the breakout trades, and some case studies for application. So along the way, I will straight away show you the chart. Okay, so we will learn from the chart. So are you ready? Okay, so we're going to start. Okay. The origin and history of Fibonacci. So if you were to listen or to hear this name Fibonacci, you probably will think, what kind of origin is this? What do you think? Fibonacci sounds like from which country? Anybody? Fibonacci sounds like from which country? Is it from Malaysia or Spanish? Not quite Japan. Italy, Italian, yeah. It's Italian. Okay, so Latin, around there. Okay, so The exact origin Fibonacci sequence is actually unknown, but then, however, this person, his name is Leonardo of Pisa, and aka Fibonacci. So his name is Fibonacci. So that is why it is named after him, because he actually liked mathematics a lot. How many of you like mathematics? Anybody here who love mathematics? Anybody? If you love mathematics, you type a 1. Okay, so I want to see who is good. Okay, some say not me, a little bit. No, that's great. Okay, so today is your session. Okay, love simple math, not additional math. Okay, simple math. Okay, today's session is very simple math, so it's all about ratio only. Okay, so you will see very simple. The important is that we just need to know the concept, the concept behind it. You don't have to memorize the exact ratio, like 382, 618. You don't have to memorize exact numbers, but you just have to understand the ratio is about 1/3, 2/3, this kind of rough ratio, then you'll be able to understand better. Okay. Okay, so no, I don't have a open account. Okay, I'm not a reminder. Okay, so for Fibonacci, it's actually a sequence of number. So the sequence of number, if you to look at our natural environment. So our natural environment is actually made up of Fibonacci. You'll be surprised. You can see that the Fibonacci numbers are in fact 0, 1, 2, 3, 5, 8, 13, 21, 34. So these are Fibonacci number. So if you to count the flower, okay, the flower, the number of petal in the flower. So those flower petals, right? In fact, according to the book, it says that it is with the Fibonacci numbers. So you have flowers with 5 petals, 3 petals, 8 petals, okay? And the human, the proportion of the human is 1/3. So you will see that we have 1/3. And then even the animals, okay? So like fish, if you were to draw a fish. So if you to draw a fish, it will be some sort like a 1/3 as well, the ratio. So it will be like this, like this. I'm not good in drawing, but roughly it's like 1/3 is here, and then 2/3 is the body. Okay, so if we were to draw a human, so it's about, okay, so 1/3 is here, and then 2/3 is like this. So basically, proportionally, we want to see even a building like a house. Okay, like a house. We want to see like something like here is about 1/3, and then here is about 2/3. Okay, something like that. So whatever we see in nature. So this we call is very natural, and then it's nice to look at. Okay, so if let's say you see a house with the roof is actually half of the height, and then the house is like half of it here, and then half of it here. So isn't it, you find it, this house is a bit weird. Okay, so that is in nature. So they look into this Fibonacci numbers into the stock market as well. So then we will have to understand those ratios, and then the effect on the price chart, and then whether it will help us in trading or not. Okay, so let me explain how we got these numbers. So these numbers in fact starts with the word the number 0. Okay, start with 0 and then followed by 1. Okay, you just start with 0 and 1, and then the rest you just add them up. So it will be the first two number add become the third number, and then these two number add together become this number. So 0 plus 1 is equal to 1. 1 plus 1 is equal to 2. 1 plus 2 is equal to 3, and then 2 plus 3 is equal to 5, and then these two add together equal to 8, and so on. So then this is the Fibonacci number. So if you find this 144, you find that this 144 is very familiar. Sometimes even the stock price, somehow it will stop at 144. Okay, and then 550. And of course, these are some common number like 1, 2, 3, 5, 8. Okay, so these are Fibonacci numbers. Okay. Let me go to the next slide. And if you were to divide the front number divided by the back number, you will get roughly, okay, for example, if you use the front number like 5 divided by 8, okay, so if you use your calculator, 5 divided by 8, you see that it is 0.625. And then 8 divided by 13, 8 divided by 13, and then it will give you 0.615. And then when it goes to the bigger number, 89 divided by 144, it will give you 618, 0.618. So of course, the front here is a bigger portion, but the back here is all 0.618, 0.618, and so on. So whenever the front number divided by the back number, you get about 2/3, which is 0.618. And if let's say you use the back number divided by the front number, let's say 144 divided by 89. So 144 divided by 89, so it will give you 1.618. So you see how amazing the numbers are. So whenever, okay, so I write here, whenever the front number divided by the back number, you get 0.618. Okay, and whenever the back number divided by the front number, you get 1.618. So this 618 is a very, very well-known Fibonacci ratio. And sometimes you see that while you are driving on the road, and then you see suddenly the front car, there's a car plate 618. So then you know that this person must be a remisier. Okay, and sometimes you see the Gmail, and then the Gmail with a certain name and then followed by 618. This person must be working in a finance industry, probably a remisier or a dealer or some sort of who knows about chart. Okay, Fibonacci. So he likes to use the word 618. So these are very common for trading. The numbers are very, very common for trading, which we will look into it later. Okay, then continue. Okay, let me erase this thing. Okay, so these are the numbers, the pedals. I don't want to spend too much time. So we go straight to the Fibonacci and trading. Okay, so important, we will trade for the retracement or the extension. So there are two applications of the Fibonacci. One is that you see that the chart is like this. Okay, let's say the chart is going higher, higher, and higher, right? So you wouldn't want to see a chart that is go on like this, one straight line like this. No, there is no single chart that is going one straight line like that. The chart is always you go up and then you retrace a little bit, and then you go higher, and then you retrace a little bit, and then you go higher. And then even sometimes you stop going higher, you maybe retrace a little bit more, and then until here, then you maybe move horizontally. So whatever it is, right? So all this retracement, we call it the Fibonacci retracement. So in a normal uptrend, a very, very healthy uptrend, you want to see that it is going up in a very, very healthy bullish trend. If let's say you want to use moving average, it has to be above that 20-day moving average or above that 200-day moving average, which is on an uptrend. So the retracement is usually, it's not always, but it's usually about 1/3. Okay, if it's a healthy bull trend, the retracement is about 1/3. So meaning that you go from 1 ringgit here until 3 ringgit. Okay, 1, 2, 3. And then when you retrace 1/3. Okay, then you retrace to 2 here. Okay, because you retrace 1 ringgit, 1/3. And then after that, then you go up again, and then you go up for another 3 ringgit. From 2 here, you go up plus 3 is equal to 5. Okay, so 5. So from here is 3 ringgit height, right? So with this 3 ringgit height, you retrace 1 ringgit because you retrace 1/3. So then you retrace 1/3 here is 4 ringgit. Okay, so whenever you are retracing, right, you see that you are having a higher low. Okay, your low is always higher. So then from here, you go by 3 steps also, 3 ringgit up. So from 4, you add another 3, become 7. Are you following? Okay, we are doing some mathematics whereby we start from 1 ringgit here. So from 1 ringgit to 3 ringgit is 3 ringgit, right? So we retrace 1/3. So we trace 1 ringgit down. So it will be here, 2. So from 2, we add another 3 ringgit, and then we become 5. 2 plus 3 is equal to 5. And then from 5, you minus 1 because you retrace 1/3, and then become 4. And then 4 plus another 3 becomes 7, and then 7 minus 1, and then you become 1/3. So in this case, let's say it retrace 2/3. So then you have to retrace minus 2. Then this become back to 5. Are you following? Okay, if you follow, you type a 1. If you are not following, you type a 0. Okay, let me see. Okay, I see 1 to 0 here. Okay, you see, I am drawing again. Okay, so here I am moving. Okay, let's say I'm moving from 1. I start from 1 ringgit now. Okay, let's say this one is Top Glove, 2020 Top Glove. Okay, 1 ringgit. And because it was a pandemic, so everybody wanted to buy from Top Glove, and then the price moved from 1 ringgit to 3 ringgit. Wow, 2020, yeah, 2020. And then so here will be 3. Okay, so after you have gone to 3, then you is my screen okay? So if my screen is okay, you type a yes. So okay, so that means Kendrick is your screen. Okay, so my screen is okay. So from 1 ringgit to 3, wow, everybody buy the Top Glove. Okay, so then it become 3. So but however, because you make so much money already, right? So you want to take profit, isn't it? You want to take profit. So you take profit, and then you sell down, sell, and then you sell down to 2 ringgit because this is a good stock. So people think that the price will go higher. So when it come down to 2, wow, everybody rush in and buy in again. So the price go up again. Okay, so when it go up again, it go up by another 3 ringgit. So from here, because it retraced to 2, right? So this level is 2. So then you add another 3. So then it become 5 here. Okay, so 5 is there. So then, oh, people make so much money already, so they want to take profit. Then the price reverses, and then it comes down. So when people take profit, then it will sell down until it retraces about 1/3. So 1 ringgit gone, and then it go back to 4 here. Okay, so after that, then the pandemic is never ending. More and more people die. So then everybody rush in to buy again, and then the stock go up again, another 3 ringgit up. So from 4, you add another 3 will give you 7. And then after you go up by 3, you come down by 1, retrace by 1/3. So this thing will go on and on as long as people think that this stock is undervalued and it is full of promising, and then it's very cheap, and then people will just chase after it. Until one day you see that, wow, it didn't stop at it didn't retrace by 1/3, it retraced by 2/3. That means the price go down by 2 ringgit. Okay, so it back to 5. Okay, so now people are questioning, it's not worth so much. It's not worth 7 ringgit. It's like 5 ringgit. So then people will sell down until 5. So then there is a retracement of 2/3. So when you see a retracement of 1/3, a correction of 1/3 of the price, and then compared to another time whereby there's a correction of 2/3, you retrace by 60%, okay, 2/3. So how do you find the psychology of this one and this one? Okay, this is A, this is B. Okay, which one is more bearish? A or B is more bearish? Which one is more bearish? Okay, very good. Okay, everybody is correct here. So B is more bearish. Yeah, because when you see more and more people take profit, it means that the underlying trend or this underlying stock it may not worth so much. It's not worth for me to hold at 7. So then people sell down to 5. So there's a retracement of 2/3. So that means this underlying trend is in question. There's a question mark for this stock. So then it continued to go higher, but after this 2/3 fall, you see that this price very difficult to go higher unless there is some renewed kind of a interest on this stock, and then people drive this stock higher. Okay, otherwise it probably will find it quite difficult to break through again this level 7. So then it probably will hover horizontally for quite some time before it gathers the momentum, and then before it go up again. It's either they go up or they go down. Okay, so it's either way. So but anyway, when it loses the momentum, it probably will go horizontal for quite some time. So therefore, the part whereby we need to use the Fibonacci is when we want to identify that it is an uptrend. So when it is an uptrend, we want to go in when it is still going higher. So buy in dip, buy in dip, and buy in dip. How about a horizontal trend? Okay, so if it's a horizontal trend, you buy in dip, what happened is that, okay, so now it is going horizontal trend. So what happened is that whenever it go up and then it retrace, right? It retrace back to the original level here. It's like 100% full retracement. And then after that, then it go up again and then it retrace. So is it fun or is it rewarding for you to hold buy around here? Is it good for you to buy here and use this strategy to buy using Fibonacci to buy this? No, it's not, because after you bought, it's like full retracement back to your original price, and then after you bought, it keep on coming back to the original. So whenever it is moving horizontal, right, I think you don't bother to use this method too much. Okay, this method works best when it is on an uptrend, like a full of momentum, so it works the best. So we need to, so before we apply the Fibonacci, right, it will be important to identify the underlying trend first, whether it's uptrend or downtrend. Okay, it could be a downtrend too. So as long as the trend is a strong trend, uptrend or downtrend, then you use the Fibonacci, either retracement or extension, it will be more rewarding. The chances of success is higher. And if let's say you know that this whole thing is horizontal and then it's like boring, it's not going anywhere, don't even want to participate in this trend, because it takes you nowhere. Okay, even if you to go in, it's like you will lose money only, then not worth for you to risk your money, because your money is very precious. So therefore, identify the underlying trend first. Okay. Do we consider the high volume to determine the minor retracement? Yes, we do look at the volume, because if let's say the price is going higher and higher, okay, you know that the price is going higher and higher, but the volume is like going lower and lower. So you know that this underlying trend is also getting weaker and weaker. So the volume will give you a confirmation, okay, of this direction of this trend. So the volume is important. Yes. Okay. Okay. So let's continue. So this is the number. You don't have to memorize the number, but of course, if you can memorize, it will be good. So the number is 0.236. So this 0.236, in fact, is about 1/4, 0.25. Okay, it's 1/4. Okay, so it's very near. So you just, oh, roughly about 1/4 of retracement, roughly. So then you know that it's 0.236, but you forgot the number. Okay. Beyond 0.764. Okay, so if let's say you beyond, I would think I will later we will come to that, meaning that if it's beyond this 0.618, it means that the trend is changing. Not this one, but this one. Okay, by theory, in theory. So the next one is 0.382. So this one is very close to 3. Okay, so it's about 1/3. So that's why just now I said 1/3, 1/3, 1/3, right? So it's roughly around there. Then another one is 0.5 is half. So 0.618 will be 2/3. And then this will be 3/4. Okay, so if you were to look at the ratio like this, very simple. So it's like 1/3, 1/4, 2/3, 3/4, this kind of a ratio. So your original trend is like you go from 1 and then 2. Okay, you go from 1 to 2. So then when it retraces 1/3, you have to minus this whole thing. You have to, this whole thing, the difference is 1, right? So 1 times 1/3. Okay, so times 1/3 divided by 3. So it will be 0.333. So therefore you have to minus 0.333 from this 2. So minus from the 2. So it will give you 1.67 here. So I minus 0.333 here. Okay, to give me, yeah, I'm sharing my screen. Can you see my screen? No. Oh, let's see. Oh, but everybody see my screen. Okay, so I think everybody see my screen. Dark screen. Yeah, but my slide is white background, right? This one is white color, right? Okay, so I'm using the manual calculator to calculate this Fibonacci retracement. So it's about 1/3. Okay, so if you want to be specific, you use the difference here. Okay, 1 times 0.382. So then you have to minus 38.2 cents from this 2. Okay, so you minus 2 minus 0.382, then you give you this around that figure. And then from here, 1.67, and then you go up higher. Okay, so you go up higher. Okay, let me draw again. So you go up higher, then you will start counting from this level onwards. So then this level, you will times the Fibonacci level. Okay. Peter has an earlier question. So, okay, let's see, Peter. Where is your earlier question? The trend looks ascending. What about irregular trend? So irregular trend, is it going horizontal? Okay, so if it's going horizontal, is it good to use this Fibonacci? Okay, so you have to ask yourself. Okay, usually the irregular trend is within the correction phase. Some guru also monitor the 72% retracement instead of the 78. Okay, so it's people's preference, because if you understand the financial market or the underlying stock, the behavior. So for example, there is a certain stock ABC, and always whenever you see there is a retracement of a 72%, then it will rebound, 72%, then it rebound, then of course you will recognize that. Okay, so different stock or different financial market or index or the environment, they have their own characteristics. So you can't apply one that fits everybody. So you just have to understand the chart very, very well in detail. Okay, so history will repeat itself. That's right. Okay, the thing is that you will see that the history, the thing about technical analysis is that we believe that the history will repeat itself. Okay, so let's see some real thing. Okay, so I will share with you a chart. Okay, so can you see my screen here? Can we double confirm? So can you see? Yeah, okay, very good. When we mention about uptrend, does it refer to a major trend or a minor uptrend? Okay, it doesn't matter as long as it is an uptrend. And as long as it is above that 20-day and also the 200-day, it's an uptrend. Okay, so here is an uptrend. Okay, so now you see that I use this front can. Okay, when I want to illustrate this topic, right? I want to find a chart that is with an uptrend so that you can understand better. Okay, so later I will also share with you with a horizontal trend, and then you see the difference. So here, this one is a uptrend. It's a clear uptrend because it is above the 200-day moving average, and then it's hovering around this 20-day moving average. So one important concept about the Fibonacci is that you notice, if you notice, is that when you go up, okay, when you go higher, you will reverse from that top. Reverse from the top, and then you will go down. So meaning, the minute when you reverse, right, it is the swing. We call it the swing. So it's like this. You go higher, okay, and then you reverse. So when you reverse, this is a swing high. And then when you go high, low, from low to high, this is a swing low. So swing low, swing high, swing low, swing high, swing low. Can you see? Yeah, especially for those of you who doesn't have any technical background. Important is that you identify the swing high and the swing low. So the swing high is that you see is like a U shape here or V shape, swing low. And then this is the inverted V shape, swing high. And then you see a V shape here, swing low. And then inverted V shape, swing high, swing low. Okay, swing high. So these are the swing low and swing high. So if let's say you really too new, okay, you are new to chart, and then you do not know how to recognize. Okay, so one thing is that you can, okay, let me erase this. If I can erase this. Okay, cannot erase, but anyway, I use this trend line. You can start to draw the trend line. Okay, so whenever you draw a trend line, this is broken. Okay, so this trend line is uptrend, and then this is broken. So the minute it is broken, swing high. The beginning of the trend, swing low. Okay, again, you draw another trend line here. Okay, so it's broken, right? So the minute it's broken here, this is the swing low. And then the beginning of the trend here is the swing high. Okay, you draw another trend line here. So here broken, the trend is broken. So here broken, so then this becomes the swing high, and then this becomes the swing low. Okay, do you get it? So here I can draw a trend line as well. Here also broke the trend. So then this become a swing low, and then this become a swing high. So you just move. Okay, let's say this is a big swing. Okay, so you can say that, oh, swing high, major swing high. But within there, you can also draw a smaller trend line. So small swing high and also some small swing low here, small swing high here, and then the small swing low here. Okay, so do you use the point of the high or the high of the body? Okay, the tail, I don't use the tail because the tail is usually the extreme, like the market react too much, the extreme. So usually I will use the body of that candlestick, which is the opening and the closing. Okay, so I normally will use that. Okay, then you draw a trend line. So the very first step, okay, if you want to master the Fibonacci, right, is that, or any technical analysis, you must learn how to draw the trend line. That means without much thinking, while I'm talking to you, I can draw the trend line without thinking. So meaning that it's automatic to me already. It's like a reflection already. It's like I see this, I draw, I see, I draw. I don't have to think so much. You get what I mean? So meaning that it's all practice. So if you can practice drawing the trend line on a daily basis, every day you keep drawing, every day you keep drawing. So one day you'll be like me, whereby you look at the trend straight away, you just draw. No need to think so much because you already know. So then you will know that, oh, swing high, swing low, swing high, swing low. Okay. Okay, this part here, understand or not? Because in order to do the Fibonacci retracement, right, you must identify the swing high and the swing low first. So that is the most important. Okay, can you identify the swing high and swing low? Yes or no? Okay, if yes, you type a yes. Okay, so if you know how to identify the swing high and swing low, yes, very good. Okay, so then the next part I want to talk about is the Fibonacci retracement. Okay, so say, for example, you look at this trend, okay, from here, go up and then come down. Okay, so the minute it come down here, this is called a retracement. So if I were to use a straight line to measure this height, okay, so this is the base. I start from this base, and then this is the top here. And let's say I don't count the tail, so this is the tail. I just count the body of that candlestick. So then I start from this swing low, and then I end at the swing high here. Okay, so I measure this height. Okay, I measure this height, perpendicular, 90 degrees here, perpendicular. Okay, I measure this height. Okay, so this height, in fact, this height is what I told you just now, is from 1 ringgit to 2 ringgit, that height. Okay, so it's from here to here. So therefore, I need to see what is the price. So the price here is 2.11. Okay, 2.11, but I want to round up to 2.1. So this is 2.1. And then the swing high here is 3.7. So then I want to find out the distance. 3.7 minus 2.1 is 1.6. So then this height here is 1.6. Okay, so this height here is 1.6. So now, if I want to anticipate, okay, if I do not know that how low it will go, let's say I move this to here. I don't know how much it will retrace. Okay, I don't know. I just know that the line has crossed here. I just know that my line has just crossed because it's crossing down, right? So it's breakout. So once it's breakout, I know this is a swing high. So once I know that it is a swing high, I can try to predict, try to measure how low this retracement will reach, because I know that it will go up, and then I know that it is an uptrend. So I will try to see that this correction, okay, this correction, how far is this correction? So usually the normal correction, a healthy bull, it's between this. The normal healthy correction is between 1/4 and 1/3. It's about 0.236 to 0.382. So it's about 1/4 or 1/3 kind of a retracement. Then it is a healthy. So we want to assume that being this one is a technology stock, and that is one of the hot stocks. So we want to assume that it will retrace around this level. So therefore, let's say we use a rough guide and say 1/3, okay, 1/3 retracement. So therefore, I need to multiply. Okay, I need to multiply 1/3. Okay, so then 1.6 times 1/3, which is 1.6 divided by 3. Okay, so will be equal to 0.53. So meaning I need to minus 0.53 cents from the top level here. So the top level here is 3.7 minus 0.53, and that will give me, okay, 3.7 minus 0.53, and that will give me 3.17. So therefore, I will anticipate the price will retrace to around 3.17 like that. Then only I will buy in dip. I will go in and buy. So I wanted to buy this stock. Let's say this is a very, very good stock, let's say. And then I wanted to buy, and then I'm just waiting for the opportunity to buy. So then I have to wait for a retracement. So retracement is always a good time to buy. So I wait for a retracement to about 1/3, and then I calculated it's about 3.17. So then I said, okay, I will wait until around 3.17, then I'll buy. Okay, so let's see. So in the end, there is 2.98. Okay, so in the end, the price go a little bit beyond about 2.98. Okay, so if let's say you want to use that Fibonacci, you can use here. The first one is called Fibonacci retracement. And then you go from the bottom here to the top here. Okay, and you see that it is around 50% of a retracement. Okay, so this one is around 50, is slightly short of 50. It's not even touching that 50, but it's around, it's more than 382, but below that 50%. So then the price rebound from there. But for you, because you wanted to buy at 1/3, so probably you will enter at 3.17. It's okay, because if it's, as long as it is on a good trend, on an uptrend, you will probably see that it will go higher. Okay, so that is when you are looking at buying at the Fibonacci retracement. But of course, you probably may want to use this trend line. So whenever there is a trend line break, then only you buy at the breakout. But whenever you buy a breakout, it may never be the lowest price. This price will be much higher, and it will never be the lowest. Okay, question. How accurate this method in terms of the percentage? Okay. Of course, in technical analysis, it's not 100%. Okay, there is no 100%. But the thing about the technical analysis is self-fulfilling, meaning that the more people know about it, the more obvious the trend is. That means everybody see it, and then everybody use the same calculation, and then they derive at the same number, then it will happen to that number. So it's more on the self-fulfilling. So if you see a trend which is very, very obvious trend, so the chances of success rate is very, very high. However, if let's say you see that the trend is a weak trend, it's not very, very clear, then if you apply, it won't be too successful. So is it subject to different stock to decide whether we decide the retracement, but how we could justify this? There is no way we can justify, because sometimes it will retrace 1/3, 1/4, 50%, or 2/3. It depends on the sentiment, because the investment environment is always full of sentiment and news. So if let's say the sentiment happen to be on a weak side, so that means it's like tonight is a kind of like bearish sentiment. So if let's say it happened to be in a bearish sentiment, so perhaps the market participants overreacted a little bit. So when they overreacted, supposed to be retraced by 1/3, but because they overreacted, so therefore it retraced by 2/3. Who knows? So therefore, technical analysis is technical analysis, but sometimes it will be influenced by the sentiments. So if you see that the sentiment is a bit on the weaker side, so maybe you will allow more room to fall. Okay, so you don't go in around 1/3, maybe you go in around 50% or 2/3, because you see that the environment is so bearish. So you better be careful. You understand? So that means when you apply, you also need to look at the environment. Okay, so if I buy at 1/3 without considering the price maybe retrace lower, isn't that risky? Should we wait and see the candlestick? Yes, yes. Okay, Michelle, yeah. So usually the reversal is the candlestick reversal. So if let's say you want to wait and see whether it's a swing low, okay, wait for a reversal, because sometimes it may continue to fall, right? So you wait for a reversal. So therefore, you probably, or you have to see the candlestick. Usually it will be a reversal candlestick. Then only you can be sure. Okay, sometimes if you're looking at recently our KLCI. Okay, so recently this is our KLCI. You see how we keep falling and falling and falling, right? So then when it is falling like this, people are very, very scared. So you don't go in first, because while it is dropping, you can't go in. So therefore, you have to wait for a reversal. So therefore, there is a reversal candlestick here, which is the hammer. You see the long tail here? I zoom in. Okay, so there is a hammer here. So therefore, it is one possible reversal. But however, the next day followed by a gap up. So there is a confirmation, because it's a gap up and then followed by another gap up. So therefore, this is a reversal. Okay, so then you can buy in when there is a reversal. So you don't buy in when it is dropping. Understand? Okay, what is the retracement at what is that figure? I can't read that figure. What is that? Will consider as 4. What ratio is that? I can't see. Can you write in a 0 point something? Okay, a tool to minimize risk, not guarantee win. Yeah, it's something for you to it's because there are so many trading strategies. So tonight we only look at one trading strategies, which is using the Fibonacci, and there are so many. For example, the trendline break and other or divergence or other strategies. So sometimes you look at the situation, and then in this situation, probably you say, okay, I want to use Fibonacci. Then you look at the success rate, see whether the reward to risk, and then see whether it is suitable for you. So later, at the end of the slide, there is a section whereby we talk about the reward and the risk, okay? So, but now we identify how to look at the Fibonacci first. Oh, percentage. Oh, what is the retracement percentage? We'll consider as a fall uptrend, a failed uptrend. Okay, when there is more than 2/3. Okay, so when this one's supposed to be going up, right? You see that this one is going higher and then higher. And then suddenly it keep on falling. So this falling here is like fall to this original uptrend here. It's like 100% retracement. And not only that, so whenever you observe the Fibonacci, right, always remember to see whether there is any chart pattern. So for example, if you are looking at this, okay, now you are seeing that, oh, going up and then going lower and then going up and then going lower. So this going lower, right, you probably will say, oh, retracement of 1/3 or half, then it will retrace. But as you see, every day is going lower low. Every day is lower low, lower low. Okay, every day is lower low. Suddenly there's a gap down here. And once you see this, right, quickly you ask yourself, do you see a chart pattern? Okay, do you see a chart pattern? So here, do you see a chart pattern here? Anybody? So when a triangle, some more, any more? what chart pattern is that? Double top, yeah. This is a double top. So when you keep on retracing until full retracement, this is what we call a full retracement, 100% retracement. Retrace from this uptrend, so it's back to the original down here. So it's full retracement. Then you straight away you can see a new thing coming up, which is a chart pattern. And this case is a double top. So when you see a double top, right, then you have to use the chart pattern to overrule many things, because chart pattern is the biggest, okay, it's the most important. It will overrule a lot of things. So then you will have to read this chart using the chart pattern. Then it will be no longer simple retracement, but more like a chart pattern kind of a target fall. Okay, so number one, when you identify the Fibonacci retracement, first you have to identify swing low and swing high first, right? So you identify swing low and swing high by drawing a trend line like this. Okay, so then this one broken, so then this is the swing high and then this is the swing low. So that is number one. Then when it is dropping, you try to estimate what is the retracement, how many percent of this original trend. Okay, so you can use this one. And then you can see that, oh, it's a retracement of 50%. And then you don't enter here, but you enter the next candlestick when you see a reversal candlestick, a bullish, very big bullish. It's a Marubozu here. Okay, so it's a very bullish candlestick, then it's a reversal candlestick. So therefore, you see that, oh, it's a reversal. So then there is a going uptrend. Okay, so then it went up. So after that, when it is going up, you can follow by a uptrend here. Okay, you can follow by an uptrend. So, but however, it crossed the 20-day and then it crossed this trend line. So meaning that this uptrend is broken. So then you can see that there is a swing low and then a swing high here. Okay, once the trend line is broken, straight away swing high and swing low. So with this swing high and swing low, you were estimating that it may probably will fall to about 50% and then it will retrace. So here it did fall to about 50%. But the thing is that when it retraced, right, it didn't manage to pass that previous high. And then in fact, it reversing down. So when it reversing down, it go back to the original up leg here, 100% retracement here, back to square one. So once it back to square one, quickly you go and see whether there is a chart pattern. Yes, there is a chart pattern. So the minute you see there is a chart pattern, you will use this chart pattern to overrule whatever thing that you see, meaning that this chart pattern will overrule. So meaning that you have to look at the height here and then measure the height here, and then the target will be this height. Okay, so will be this height. So will be around this level, and then you project down to this level, which is around this level. And then you see how the price move. Okay, so it overshot that level, and then the next thing is that you see whether it is supported by the previous low, swing low here, and it also overshot. Okay, so meaning that it is very weak. Okay, so recently there is a reversal, so then that's how it is. Okay, for reversal, is the Fibonacci method better than the MACD? It's different people will have different opinion. For me, I find that I just use the trend line and the candlestick and this to see. Okay, I don't need MACD. Okay, so it's personal preference. So for me, how you look at the reversal, you just look at the trend line and then you look at that candlestick reversal. Okay, July 8th and September 20th considered as failed, reverse. How to know if these are confirmed? July 8th. Okay, July 8th. July 8th. 6, 7, 8. Okay, so over here, you see that there is a small candlestick here. Okay, so for this particular case, I will look at this large candlestick here. So for me, as a guide, I will look at half of that candlestick. Okay, so I will draw half here, half of this candlestick, and then I will see whether this candle can pass that or not. So obviously it cannot. It cannot means it cannot. So it's not a reversal. It has to come down. You got it. So it didn't pass that. It didn't pass here. 50% of this large candle. So it's not a reversal. Okay, September 20th. September 20th. Here, September 20th. For here, there is a gap. You see the gap? So whenever you see a gap, you draw a line here. So as long as it didn't fill the gap, no reversal. No reversal. Understand? So meaning your fundamental, your understanding about your technical analysis is beyond simple like trend line. You must have a strong understanding. You see, I use a lot of things. So in this case, I use this gap analysis, and over here I use the candlestick analysis. So meaning that it's a combination of everything. So it doesn't matter, it will take time. Okay, it will take time. So don't worry, you learn bit by bit. Okay, so today we just learn how to draw the Fibonacci. Okay, by looking at the trend line. Okay, it's a June 14, similar to the September 20, June 14. June 14. 14 is this one. Okay, June 14, you see that you have a very large candlestick. Okay. And then, however, above that candlestick, you see that there is a big gap here. So meaning, if I were to see a reversal, I still have to fill this gap. I still have to fill this gap. Otherwise, it's not a reversal. You get what I mean? So this one is not a reversal. Can you explain the color chart again? How to use it? Color chart. Color chart. Oh, you mean the candlestick color, like red and green. Okay. The red means it's a bearish candlestick. That means that day is a down day. It went down. You see? Down, down, down. Red color means down, down, down. Green color means up, up, up. Okay? Not candle chart. Then what? Which one? Color chart. Oh, you mean this Fibonacci? Oh, okay. So, okay, this Fibonacci, I'm using the swing low and the swing high. So I will erase this again. Okay, so here, can you see that there's a swing low and a swing high first? Okay, can you see that? A swing low and a swing high, right? So I measure this swing low and the swing high using the Fibonacci. I touch one point here and then I touch another point there, so that I will see that my retracement is here. So if let's say retrace by 236, it will be this level. Retrace by 382, it will be this level. And then if retrace by 50%, it will be this level. Okay, this level. So in this case, it did retrace by 50%. Okay, so it was a 50% retracement before it go higher. Okay. Okay, so this Fibonacci retracement, this part here, do you understand? Okay. So then the next thing is that just now I did say that whenever you have a Fibonacci, by right, you should see a bullish trend, right? But in this case, it is a bearish trend. And that is because we are below this 200-day moving average. And this is the KLCI. Okay, we are below the 200-day moving average. So meaning that if you are looking at retracement, so all this is all kept below this 200-day moving average. The whole trend is still a downtrend. Okay, go back to our front cap. It should be week to week or body to body. For me, I prefer the body to body, okay? Because the week, I find that is extreme emotional reaction, okay? So I prefer to use the body of the candlestick like this one, okay? it should be okay. So let's see a bigger picture here. Okay, just now we were drawing something like this, right? So we said, oh, this is retracement 50%, then it continued to go higher. Now, what is the difference between the Fibonacci retracement? Okay, Sufyan, I'm about to explain this part here. So just now, we understand that the retracement is here, right? So after the 50% retracement, then it continued to go higher. Now, let me move this to here. Okay, so let's say we successfully enter at this reversal here, and then we are waiting for the big gain, right? So we say, oh wow, let's go for that big money. Okay, so then you say, okay, we go in here, and then we want to see how far it will go. So in this case, we will watch out for that previous high here. So this previous high will be our first resistance here. Okay, so after you go in here, so then you want to see the price go higher and higher and higher. And then when it reached that previous high here, then all your senses, your eyes bigger, then your ears alert, and then you are like going to see some big movement. Okay, because you see the technically, if let's say the chart, the price is passing this previous high, it will go for a higher high. So it means that it will go breakout. It's a breakout. So then you will have to use Fibonacci extension here. Fibonacci extension. Okay, so this Fibonacci extension, do you see that I have this 1.236? In fact, this 1.236, I just put a 1 here, then become 1.236. 1.382, 1.5, 1.618, and 1.764. Okay, I just put a 1 in front. So what does that mean? So it means that just now I measure this. Okay. Just now I measure this height. Okay, from this bottom to the swing high here. So therefore this is 1. Okay, 1 time. So extension means that I want to add this to the bottom of here. I want to add to the bottom of here, and then I want to see how far it will go. Okay, so if we go by 1 time, 1, okay, 1 of this 1 time, it will be this level. So if let's say this level times 1.618, okay, if this level times 1.618, then it will go to that higher level. So let's say you want to calculate the here. Okay, so this level here is how much? It is 2.1 to 3.7, right? So 3.7 minus 2.1. So the distance is 1.6. So therefore, here I multiply the extension 1.618. Okay, so that will give me how much? 1.6 times 1.618, 2.558. 2.588. Okay, so with this 2.58, I want to add on to the base here. So this base is 2.97. So I need to add to that. Okay, so I need to use 2.9. Just now, what was it? Okay, let's see. 2.97. Okay, 2.97 plus 2.588. So it's equal to 2.97 plus 2.588 is equal to 5.55. Okay, roughly around that 5.55. So if I were to go for that 1.618, so it will probably go up to 5.5. Okay, 5.5 level, and that is a Fibonacci extension of 1.618. That is a very strong bullish trend. It will go up to that level. Okay, so let's see this one. So unfortunately, that the most that it can go is about near the 4.5 there, is around there. It didn't go up to that 5.5. So that means this level it is not that 1.618, but it is another one. Okay, so for extension, we use a second icon here. So we are looking at this level, extend here, and then extend here. So start from here, click here, and then you click here, and then you try to see your extension. So how far is the extension? It is up to this level. Okay, so this level, it is not even 1. The 1 is until here, 4.5. So that means this level is around there. Okay, let's see. Okay, so that is using the Fibonacci and try to see whether it will go higher or not, especially when it passed that higher high, past the previous high. Then you have to use the Fibonacci retracement. So this will answer Sophian's answer. Okay. So this will answer Sophian's answer. That means we will try to go beyond the previous high, then only you can use the extension. If it didn't go beyond the previous high, you cannot use the extension. You can only go back to the retracement. Understand? How to get the 3 point? Okay, so I repeat this step. Okay, I repeat this step. Okay, I have to erase this one. Okay. Okay, so oops. Okay, so here I am using the second icon here, the trading view, right? The first one is Fibonacci retracement. The second one is the extension, right? So because this one is the base, so you start from the base, you click one time, extend to the swing high, and then you go to the base of this leg here. Okay, and then if you want to see better, you can extend so that you can see better. You can see better. So then you can see, okay, if it's go to one time, at least one time, then at least it will go to 450. Okay, so BOE, do you know how to use this? You click the base one, click another one, second click, and then the third click. 1, 2, 3. If using the Fibonacci extension, nearly get 1.618 equal to 9. Yeah, that's right. 5.55, right? So that is 1.618. And in a very bullish trend, it will reach that. For example, if you look at the gene tag, okay, for your homework, okay, for your homework, you use the gene tag, and it is 1.618. Okay. Yeah, this one can be replayed on the YouTube. You have to subscribe to live chat, okay, then it will be on the YouTube. Third click is placed by, okay, third click is because of this retracement. Remember, this one is a retracement, 50% retracement, right? So this will be the retracement. Is that you are trying to jump, okay, you are trying to jump, and then you go on to one step up. Okay, you jump from here, you jump to another step up, and then from here you jump again. Okay, so from here you jump, so that means it's from here you click until here, so that you want to see project how far you can jump, okay. So drawing of Fibonacci from top to bottom or vice versa, different. Okay, how I remember is that I go from left to right. I always, whenever I draw Fibonacci for this trading view, I go from left to right, no matter if it's a swing high or swing low. So if it's an uptrend, naturally the left will be the swing low, and then the high will be the swing high. So from here to here, okay. So the reason why I go by the left to right is because when it comes to the downtrend, right, you also use the same thing. You also use left to right so that you won't get confused. So 5.55 is the highest prediction usually the 1.618 is a very big, it will be the ideal bullish trend kind of a target. Of course, it can go up to 2.618. It will. I mean, it may, if it's a very, very bullish trend. Okay. Based on the 3 points that you create, we should estimate the target price at 1. Okay, yeah. The target price usually basic, we must reach that 1. If you fail to reach this, that means this whole trend is weak trend. Like this one, it failed, weakened already. People do not have the confidence to reach there. So that means this whole thing is weakened. Fibo retracement 0 at top or bottom. Okay, so you see, if it's a retracement, I have to erase this thing. I will show you the retracement. Okay, so here, retracement. So from here to here, okay. So then you will see that the retracement is 0 here. Okay, because you are moving 0 and then it's a 1/4 and then a 1/3 and then half. So you start from 0 there. Okay. Drawing of Fibonacci top to bottom or vice versa, any difference? So that's why I said have to memorize left to right. Okay, so Alvin have to memorize left to right. So when you are memorizing the left to right, so you will see that, okay, swing low to swing high. So when it is a downtrend, okay, so then you see this to this. I go from left to right. Left is a swing high now, and right is a swing low. And this is the retracement, which is here, 50% of retracement. Okay, so once you go from left to right, you won't get confused. Your uptrend left to right is from low to high. Your downtrend left to right is from high to low. But no matter what, always start from left to right. Then you won't get confused. Okay. For how long we should consider the retracement and extension could be reached? It depends. There is, for technical analysis, if you notice, there's no time to it. The x-axis and the y-axis, right? You are just looking at the price action and the volume, but there is no time. Okay, so therefore, one way of looking at it is that you just have to monitor week by week and then to see whether it reached your target or not, because sometimes it could reach your target within days and sometimes it may reach your target for weeks. Okay, so that you can't have the time. Is the color mean anything? Red, green, blue? That I do not know whether it mean anything. So I don't think it mean anything. Okay, the color. Okay, so let's go back to the theory part. Okay, so I just want to cover a little bit about the theory part. So then this one, just now I said that the pullback is here and then it go up. Okay, so when you are in a downtrend, so this pullback will be a temporary rally here, which is sell. It's a downtrend, you sell here. If it's a uptrend, you buy in dip, buy in dip, and buy in dip. Okay. So this is the retracement, and then you see a reversal candlestick, you buy. Okay. And then you see a reversal candlestick, you sell. Okay, because there's a resistance here. And sometimes you can see a gap down. So if it's a gap down, it's kind of confirmed already. So with the Fibonacci, it is important to put your stop loss and your target profit. So just now I didn't mention about the stop loss. So you know how to enter, but you don't know how to protect yourself. So that is also cannot. So meaning that you enter, then you have to put a stop loss, and the stop loss is usually the previous low. So meaning if you go by, okay, so if let's say you go from here, okay, let's say you enter here. So therefore, if you were to enter here, we zoom in and see. Okay, let's say we enter here. Okay, And you see that there's a doji sign and then with a long tail, okay? And then it started to reverse. So then you use this as a candlestick and then see whether it can go up by 50% of the candlestick. So you draw a 50% here, roughly lah, okay? So you see, oh, here, finally it break out, okay? It break out, then only you go in. So then it's confirmed, it's an upper trend. Otherwise, it's horizontal, 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 and then it may go down. So then you have to make sure that it is above it. So then here it is going up higher. So then it will go higher. Okay. So did I answer the question? Okay. So then so then it is going higher. Okay. Oh, yeah, where to put the swing low, the stop loss, right? So the stop loss is always when you enter here, the stop loss is the previous low. So you can put the stop loss around here. Okay, you enter here, 340, and then you put a stop loss around about 3 ringgit, because you are trying to see it will go higher or not. Okay, of course, all this you have to put a trend, like a trend line like that. So whenever you see that it is breaking this trend, then you need to sell also. Okay, so there are two exits here. One is that you want to protect. With the minute you enter, you want to protect yourself. Another thing is that after it has gone up to a certain level, you want to protect your profit. So this is to protect your profit. Okay. So 20 May is lower than the previous low. 20 May 2020. 20 May. Okay, so this 20 May, yeah, this one is lower, right? So meaning that here, because you're just below that 200-day. So here, whenever you are just below the 200-day moving average, right? Usually you will give yourself 3 days to count. 3 days, please go back above that 200-day moving average line. If 3 days you cannot go back, that means you are down. So in this case, within 2 days, it went up, bullish again. Okay. Okay, so let's continue. So reward to risk is when you put a stop loss at your previous swing low, right? Then your target is usually your swing high. So then you measure this swing high and the swing low, the stop loss, is it you have a 3-to-1 reward to risk ratio? Okay, so let's say you do something like this, okay? The swing low and then the swing high, and then you enter here, right? So let's say you enter here and you can put either here swing low. If it's too far, then maybe you want to find some support here and then try to see you can put a level somewhere there. Okay, let's say there is also another point here. So maybe you want to put a stop loss there. So then you can put a stop loss here. And the target is here. So this is your target, which is the previous high. So then you measure from here to here divided by this and see whether it is more than 3 or not. So if it's more than 3, it's a good reward to risk. So then it's worth for you to do the trade. So if it's not, it's like 1-to-1, then better not risk your money. Okay. So that is money management. Okay, then lastly, time flies. So lastly, I do a recap on the steps here. Okay. So case study, I have already shown you just now, the front can. So step by step, meaning that if you want to write down or take a picture, you have to take a picture. So basically, first, you plot the trend line to identify the swing high and the swing low trend line. Okay. So meaning you close one eye, you can draw freely. So that is plotting the trend line. Then number 2, identify any chart pattern. So when you're drawing, make sure you identify if there is any chart pattern, because if there is any chart pattern, it will overrule everything. So be careful about a chart pattern. Then make sure that you know that it is either a bullish trend or a bearish trend. So you look at the 20-day and the 200-day moving average. If it's above the 200, meaning that it's a bullish trend. So identify swing high and swing low, okay, by plotting this trend. Then you can see the swing high and swing low. So once you have all these, right, you calculate your entry. So with the entry, you try to see whether your reward to risk is worth for you to enter. And if let's say after the calculation, you see, oh, it's worth it, then you go for the execution. Okay, so before the execution, do you see that you have a series of analysis? A series of analysis before you reach that execution. Otherwise, you will be risking your money. You are just betting. You are just guessing. You are not doing analysis. You just simply buy and sell without knowing what you are doing. So you must do analysis. Okay, so this is a proper analysis. The Q&A here. Oh, Michelle asked, you are expert in Elliott wave. Could you please share how we can combine? Okay, unfortunately, today's session, I can't share with so much about the Elliott wave is because I do not have the time. So maybe in the next video, we have an Elliott wave theory, okay? And what are the probabilities of 1/3, 2/3, and 3/4 continuing the trend? It is difficult to certain which level will be hit. Yeah, there is no guarantee whether it will retrace by 1/4, whatever. There's no guarantee. It's just you look at the sentiment. If it's a bullish sentiment, it will just retrace a little bit, like 1/4, 0.236. Then it will go up again. If it's a bearish sentiment, it will go all the way to 618. Okay. Front can, if you use the wicks, it retraces. Okay. Okay, so it depends on whether you want to use the wick. So usually I don't use the wick, but it's personal preference. Okay. Can use the ABC pattern for entry. Okay, so it's ABC meaning that you are looking at that extension or what. Okay, so you have to be more specific. What is your ABC? And there is one Fibonacci where it shows time. Okay, you mean the trading view called the time Fibonacci. Okay, but however, I didn't explore that tool using the time, so I'm not sure how reliable it is. So you have to do some back testing to see whether it is reliable. So if it's reliable, then you can use it. If it's not, then you can just look at it as like a tool like that. Okay. Can combine Fibo with MACD. Yeah, you can combine Fibo with anything, with RSI, MACD, with usually people look at the Elliott wave, like what Michelle said. Okay, so Fibonacci and Elliott wave, they are hand in hand. You can use Fibonacci without the Elliott wave, but you cannot use Elliott wave without the Fibonacci. You understand? So that means Fibonacci is a subset of the Elliott wave. Elliott wave theory is a big idea. So Fibonacci is a subset of the Elliott wave. Okay, so if you just use the Elliott wave, you must include that Fibonacci. However, if you just use the Fibonacci, you can go without the Elliott wave and still okay. I hope I don't confuse you guys. Okay, let's see any more question in the chat there. Yeah, hopefully thanks to Busa webinar, then I can continue to share my knowledge. Share, always using webinar tool. Okay. Okay, so watch number. Which number should we use? 618. Okay. Okay, so for Muhammad Shamin, for this question, it depends on what chart I'm looking at. For example, last 2 years. So last 2 years, if I were to look at the S&P 500 index, index chart, that they are always retracing about 236. They retrace about 1/4, and then the most is 1/3, and then they rebound again. So that means under that situation, it was a very bullish environment, and the retracement is always 1/4 to 1/3. That was for the last 2 years for the S&P 500 index. But now it's different. So therefore, if you ask me which one is good, 236, 318, or 618, which one is good? It depends on the chart. It depends on the environment. It depends. Okay, so there is no fixed rule. How to use Fibonacci for short-term trading? I thought I have shown already. So meaning that you have to go by these steps, and then you see, you calculate the reward to risk, and then you do the execution. You can also use a shorter time frame, because if let's say Muhammad, if let's say you want to go for intraday trade within the day, intraday, so then you can go for a 15-minute chart, or lesser half an hour, 1 hour chart, so that you can apply that and then apply it meaningfully. So it depends on what is your time horizon, whether you want to go for swing trade, which is swing all the way to weeks, then you go for the daily chart. So today I'm using the daily chart because I'm looking at a bigger picture, which is a swing trade. But if let's say you are more into that short-term trading, right, then you should look into that 15-minute chart, 5-minute chart, a shorter time frame. Yeah, like 4 hour, 1 hour. Yeah, definitely. Yeah, Charlie. Yeah, Chazali. Yeah. Elliott wave soon. Yeah. Thanks to Busan webinar, and then I will continue to share my knowledge. So need to see previous history, which Fibonacci number. Shamin, actually, it depends, because if you look at the S&P 500, during that bullish time, right, they are always retracing that level. But now when it is in a bearish trend, they are different. So sometimes within that time frame, it's working well. But after that time frame, you are on another time frame, maybe it doesn't work well. So that means for us, we have to be flexible. Okay, we have to be flexible so that we don't do mistake. Okay, otherwise we think that it will repeat, but nothing is 100%. So we have to be flexible, and then we are able to change whenever the environment change. So we must act as like a chameleon. There's one animal that can change the skin color when they are in a different environment. Chameleon or something like that. Chameleon, yeah, chameleon. Okay, so it's like you can change the skin color whenever you are in a different environment. Okay, yeah, chameleon. Okay, yeah, nothing is 100% in our life. Yeah, that's right. Okay, so with that, I will complete today's webinar. I hope today everybody learned something. I hope it's good for the beginners, because I understand that too much of a calculation maybe will scare some people away, but you just have to practice. Okay, you just have to practice and practice. Okay, thank you. So back to our moderator, Nadira.
Okay, thank you so much, Ms. Pauline, for your sharing and for answering the questions. Okay, let me just share my slide first. Okay, thank you again.